Thanks for tuning into the Trade Setup with me, Neeraj Shah. What an exciting Friday it was, and it promises to be a fairly decent Monday if the global cues are to be believed, because the Dow ended significantly higher, 650 points higher, buoyed by a bullish inflation report. The PCE inflation data came in much better than estimated, both on a YOY and more so on a QOQ basis, raising the hopes that the FMC meet slated for this week would probably dish out a positive development. So keep an eye out for that. Now, amongst other things, Vladimir Putin warns of a new Cold War triggered by US missiles in Germany. By the way, the texture of the US markets is also changing. Keep that in mind, that while we're talking about all of this, industrials, old economy is making a comeback, tech is taking a bit of a backseat. So that all of that is happening within the US markets as well. And for movie fans as well as people who look at statistics, Deadpool and Wolverine has snared a $205 million domestic opening, which is the largest in its history. So movies are certainly raking in the moolah. But investors are raking in the moolah as well. Look at what the US markets did. The Dow futures marginally in the green, but essentially the Dow and the NASDAQ, both of them did very well, with the Dow actually doing a lot better than what the NASDAQ did. Like I said, a rotation policy out there. Asia's taking on from there, Nikkei in particular, Hang Seng up about 1%, ASX, Straits Times, Kospi, a fairly benign performance there. Our markets, which had a very strong move in Friday's session, are pointing to a start northwards of 25,000. Boy, what a journey it's been. So watch out for 25K, certainly something that you want to keep an eye out for this morning. Okay, what's the trade setup? Like I said, 25,000 is within sniffing distance and bulls are firmly in control. You know, as much as everybody's tried to talk about the tops, me included, that, okay, the markets are looking overheated, will we cool off? I think the markets are not showing that. So there's no point in guesstimating what the Nifty could do. Frankly, it's beyond most people's ability to be able to forecast what the index will do, because this market is looking decidedly different. What we can do is look at specific pockets. So, I mean, last week, in a budget week, Nifty media returned about 7%. So very strong performance by the media stocks. Difficult to call how do you trade them, but I'll tell you what is actually looking tradable and looking strong. Two specific pockets. Pharma and chemicals, extremely strong show. Nifty Pharma was up 2.36%. There's no chemical index, but you would see the kind of moves that some of the chemical stocks are making. I'll be surprised with the kind of strength there. So that is one to watch out for and remain pockets to monitor. And insurance, viewers, has had a near silent run up, and the charts are looking very, very optimistic if the chartists are to be believed. I mean, look at the last 1 month performance of some of the insurance names versus what the Nifty has done. Nifty up 3.43% over the last 1 month. SBI Life 17%, HDFC Life 18%, ICICI Pru 90%, LIC up 20%. Some really strong moves made by the insurance players, so you want to keep an eye out for that pocket for sure. Big day of earnings too, so that's to be kept in mind. Amongst others, HPCL and IOC somewhere. Yes, HPCL and IOC. So oil marketing companies in focus. Exide has had a really good run. Watch out for that one. Indus Towers, very important to watch out for. Watch out for Kansai, Nerolac, BEL, as well as ACC with all the cement in news, and Navin Fluorine as well because of the chemicals in news. So no Nifty name, but very important mid-cap names, or non-Nifty names, sorry, not necessarily just mid-caps, non-Nifty names that you would want to watch out for in the session today. Okay, specific stocks, it's a very long list. Start off with the big newsmaker, India Cements, Ultratech to purchase 32.72% equity from promoters in a deal. So remember, they will pay at about 390 per share for the promoter stake, and more importantly, open offer at 390. Now this will get them some shares, not all. The question is, do you want to remain an India Cement shareholder post that and tender into the open offer or no? My guess is a lot of people would choose to tender because it's happening at the same price as the promoters have sold out, part one. But Ultratech may well boost the efficiency. So what it meant for India Cements is 390 rupees open offer. Difficult to say. We'll ask analysts on the channel about whether an India Cement shareholder should tender or no, and we'll get you that answer. For an Ultratech Cement shareholder, the acquisition will help the company increase the presence in southern India. Remember, the south market share is 11% as of FY24. Some estimates say this could go to as much as 20% as well. The grey cement capacity may increase to over 200 MT by FY27 from current 140 or 150 odd. So strong move for Ultratech in southern India, and overall as well gives them access to limestone reserves. Most brokerages are constructive on the deal with the increased target price as well. The only thing to keep in mind is most of the cement stocks have had a bit of a run up already. So you want to keep that in mind as you trade UltraTech and India Cements in the session today. Godrej Properties, difficult to gauge what the impact of this would be, but Chandigarh Estate Officer has revoked the building plans and occupancy certificate of a commercial building, alleging violations of conditions of environmental clearance. So let's see if Godrej Properties has a bit of a negative reaction today. Glenmark Life too has Gujarat Pollution Control Board has issued a closure notice to the company's Ankleshwar facility. You might want to watch out for this one. Maybe some bit of further downtick out there. BHEL could have a strong move today on the upside, has received an order worth 10,000 crores from Damodar Valley Corporation. So keep an eye out for BHEL, could have a strong reaction. It's for setting up 2 800 megawatts thermal power stations at Kodarma in Jharkhand. So certainly a stock that you want to watch out for. Yes, valuations are egregious, but the order book is piling on and maybe the street will like that. I would suspect that despite the valuations, and I've done a piece on, I think, Instagram about how whether BHEL deserves such high multiples or no. Independent of what I feel, this order win will certainly spur the stock today, so watch out for that one. I'll be surprised if it doesn't get spurred, by the way. Okay, some results, and ICICI Bank is a clear favorite. They've done really well, so not mentioning that. Remember, did well, could do well. IndusInd Bank is interesting because NI is up 11%. More importantly, the gross NPAs have expanded just a little bit, but brokerages have said that this is a lot lower than anticipated. So you will see this gross NPA number. It is higher quarter on quarter, but brokerages are constructive on this number being just limited at 2%, which is why it was important to highlight IndusInd Bank could well have a bit of a spurt in the session today. Not a big spurt, but maybe a bit of an up move. Okay, Zentech would probably certainly have a move higher. Revenues up 93%, PAT up 65%, not in line with the revenues because margins YOY have come off. But for the first quarter at 43.73, not a bad number. I think for Zentech, the more important piece is the revenue. They've done 250 crores in first quarter itself. Their guidance was 900 crores for FY25. If they do 950 crores in FY25, they will double from FY24. And hence, I think the optimism in the stock, expensive stock again, but could do well in the session today. So watch out for this one. KEC, I'm not sure. Revenues were slightly higher or in line, but margins came off a little bit. And I think due to one-offs, PAT was up 109% at 88 crores. The estimates were 70 crores. The PAT was higher than estimated, but due to one-offs, keep that in mind. But they've also approved a fundraising exercise. So more importantly, watch out for that. And transfer of the cables business on a going concern basis to its subsidiary. Are they looking at, who knows, value unlocking? Maybe. Watch out for KEC, could react. Sanofi could react negatively. The numbers were way lower than estimated. So that's one stock to keep an eye out for. Margins were okay, but lower than Bloomberg estimated. 30% was the estimate. They came in at 24.9%. Could correct. Intellect Design Arena, margin crackdown again. Revenues were flattish, maybe slightly lower than estimate, but margins 13.9 versus estimated 17%, as a result of which PAT was 75 crores versus estimated 97 crores. Could react negatively. Watch out for this one. Then some positive reactions, viewers. Keynes Technologies, what a blowout set of numbers. Revenues up 70%, 504. If this is not impressive, margins maintained, as a result of which profit after tax more than doubled, 104% uptick at 51 crores versus 25 crores. Estimates were 46. Didn't beat estimates too handsomely. The stock has run up quite a bit as well. Very expensive, but it's delivering numbers. Nuvama says they have raised the target price to 5,000 from 4,200 earlier, thinking that this business will keep on delivering results. Speaking of Nuvama Wealth's numbers itself are very strong. Total income up 46%, net profit up 80%. Very strong showing. Watch out for Nuvama Wealth in the session today. Could do well. Sumitomo Chemicals, sales up 15% at 839 crores, so that is okay. But operating profit margins 19.2 versus 11%, and PAT up 105% at 127 versus 62 crores. Purely operational beat. Very strong volume growth, even if there is a bit of a pricing erosion. Watch out for Sumitomo, could react positively. Then a couple of stocks which did very well in Friday's session. Cipla, Citi's come out with a note after the numbers. The buy, a target price has been raised to 1820 from 1650. They're saying Q1 numbers largely in line. Pick up in a couple of drugs has offset the other negative impacts of the US price erosion. They believe there is sustained momentum seen in the India branded business, and it may achieve 25% EBITDA margins in FY25. This helps them raise the target price. Shriram Finance was up 10% or 9% in Friday's session, 9%. JP Morgan is overweight, target price raised to 3,200. They're saying AUM growth of 21% is ahead of target. Their FY25 growth guidance of 15% looks conservative. The asset quality performance was notably robust in a seasonally weak quarter. They are constructive there. And everybody's negative on SBI Cards. Bernstein says, sell while you can. I've never seen a note like this. Target price of 600, price of 725, current price 721. They say further deterioration in asset quality. Car additions saw a considerable slowdown, 12% negative quarter on quarter. Spends remain weak, ROE below 20%, EPS growth flat YOY. They say metrics don't justify the 5.4 times price to book multiple. Watch out for SBI Cards could react. I'm sure there are a few stocks that I have missed, but I can't cover everything really. But these to me were the more important ones to monitor in the session today. Do watch out for ICICI Bank for sure. Thanks so much for tuning in.